And it's the rare mega cap tech company that was literally at a new all-time high just a few days ago. So software has been the place. Cloud software, enterprise software has been maybe the hottest part of the market. So it was not priced for any kind of disappointment, but it never is. It's always been chronically very expensive. And the other thing that's always reliable is that Marc Benioff's going to have some enthusiastic things to say, probably, about the business, the long-term business. He always is, and a lot of times it changes the reception of the numbers.
We should say, clearly, long-term winner, but it was down 3.6% in today's trade, and it's adding another 3.4% today. So it's not a small decline for today. In terms of the numbers itself, let's bring in Patrick Walravens, analyst at JMP Securities for instant analysis, who does have a buy, a target price of 178. What's your take here, Patrick? I mean, clearly the quarter was a beat, the guidance soft. They've got some form in giving relatively a conservative guidance.
So two things. One, it was a strong quarter, as you said, in Q4. But it didn't accelerate. So they grew revenue 26% in Q4, and that was the same rate that they grew last quarter. And, investors would love to see acceleration. That's often what brings these stocks even higher. And then secondly, as you mentioned on the guidance, they basically guided below expectations for Q1 and in line for the full year. And I think people would have liked to have seen them and are starting to have been used to seeing them beat and raise. And so we didn't see the raise this time on the guidance.
So talk to us about what you want to hear from Benioff, whether it's with Kramer or Keith Block, the co-CEO, on the call, as far as whether this is still going to be a winning stock.
Oh, I think we just want to hear that Mark still loves his business, and I think he does. If you look big picture, he's got some trends that are really working in his favor. I mean, the cloud is still going. Digital transformation is still going. And then I think the most important one is just as you look across the software landscape, the companies that are putting the customer at the center of the universe are the ones that tend to be doing really well. And, all those things are working for Salesforce. So I'm not too worried about it, but it'll be interesting to see what he has to say about why he guided in line for the year.
Patrick, you did a lot of channel checks in the industry. What was some of the negative feedback you got? I know that wasn't the predominant tone, but given that the shares are down, what was some of the surprise negative feedback you got?
Well, there was an interesting complaint, which might make a good question to ask him, which is that the marketing cloud, that part of their business is still largely driven around email. And then increasingly, I think we're all in this boat, we're just overwhelmed by email and we ignore it. And sort of in-app messaging and notifications is becoming more and more important. And so we did hear some comments from industry sources saying they'd like to see better functionality there.
A question, Mike. I mean, when you look at some of these revenue breakdowns, total revenue increased 26%, subscription and support revenues up 27%, professional services revenues up 12%. Are they taking share, or are we seeing this kind of growth across the industry?
I mean, I think they're taking share, and it says this general category of CRM is taking share. And no, I think that they are. I think they're kind of
done, guys?
They're continually muscling out smaller players as well.
Patrick, just talk us through how you think about the valuation and why you've got to buy on the stock.
Well, believe it or not, Salesforce in the grand scheme of things for these high-growth SaaS companies is reasonably valued. It's trading around 6.5, 7 times revenue. The median company in this space right now on my comp sheet is over 9 times. So obviously it's been a great last 12 months for these stocks, but it's a consistent performer. It's a leader in the space, and relatively speaking, the valuation's pretty reasonable.